Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 9th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer. Basically, it tells you everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we don't know what's in your risk parameters. We don't know what's in your portfolio. And therefore, what we're doing could be counterintuitive to what you're already doing. Please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. As it being a Monday, we are not going to see a whole lot of economic data just as Mondays go. But we can look at a couple of things possibly here where we have German trade balance came in at 19.2 billion, expected to be 23.1 billion. And that's pretty much it from across the pond. And here in the United States, we didn't get anything. Anyway, on to the overall markets. We've got crude oil moving higher by about $1.27. Must have had a lot of people driving like I was. We drove 2 cars to a tournament because of a snafu on ride sharing. But anyway, so we burned some gas. I don't think that's going to put a dent in reserves at all. But having said that, anyway, we are up higher on the day in crude oil as we speak. All right, gold futures up slightly by about 60 points. Not really a flight to safety necessarily as the equities are up. It's just probably some pretty good jockeying going on for speculation purposes is all I can amount that up to. We've got Bitcoin futures up 100 points on the day. The chart doesn't look that good because it's taking in the overnight session. It's not really taking into account what happened since then. So what happened was we basically opened up higher and have continued to sell off and near the lows of the day as of right now. So it's making that chart look red despite the fact that we are in positive territory from the settlement on Friday. All right, VIX coming off just a little bit, but still in the 20s. The 20s, the new 10s for 2018. As we can see, the reason why VIX is coming off so much, and we were seeing gold come off quite a bit earlier on today, and that was another flight to quality. You take it out of that safe haven of gold and put it into a more risky asset like equities because the equities are moving higher, and that's usually the ebbs and flows of equities versus commodities. But with the Dow Jones Industrial Average up over 300 points and testing that 38 Fibonacci level right there that we've been talking so much about, really jockeying back and forth. Bulls and bears going to be fighting over those levels today going forward. NASDAQ almost a full engulfing candle today. You know, it's going to leave out that wick, but the whole body looking to be completely covered up. We've talked about this. For the last 2 weeks, we have had 300,000 point moves daily, it seems like, intraday moves, and we haven't gone anywhere. We're making all these big moves. Volatility is going up, but we haven't really moved any direction. That's why it worked out perfectly for setting up for the iron condor and the iron butterfly. So both of those strategies working out very well for environments like this where we have volatility, but the market is calming down. So we would expect volatility to come out a little bit. That theta decay, non-directional assumption, all of those things would be working in our favor in this type of environment going forward. So NASDAQ up over 130 points right now, retracing yesterday's or Friday's losses. Again, with the E-mini S&Ps up almost 40 points on the day. Not quite completely engulfing the previous day's candle, but doing a nice job clawing back some of those losses. This is that area where we are talking about. This 38 Fibonacci lines up with the long-term 61 Fibonacci and the value area high. All of those things going to act as a major resistance. We've talked about that time and time again, that the bulls are desperately needing to get above that level of right around 2666 is about as best as I can call it, that ominous number, 2666. That is the line in the sand to get above if you are a bull, and the bears are going to fight tooth and nail to keep below that. Let's look at the overnight trade. As you can see, the overnight trade really starting to cover some of the shorts that were seen on Friday late in the day. You get into the overnight, those guys can't wait to cover those nice trades. And as we can see, the market did rally back right to about the midpoint of the previous day's session and have continued to flush out the shorts coming into today. So I don't really see this really turning around or going anywhere. We don't have any economic data. We don't have any really talking heads going on to stir up the pot. So I think that we're going to kind of see a pretty quiet day with relatively low volumes throughout the day and kind of stay as an inside day from the previous day, which is what we're seeing so far right now. All right, some of you guys may have heard my computer wing bang or whatever you call it, cha-chinging. Was putting on a couple of trades that I talked about on Friday's webinar with the iron condor in there. So this set up pretty nicely, and I went into Adobe. No earnings in this next cycle, so it's a clean month. We have high implied volatility. If we can get a little volatility coming out, and it stays right between these two Fibonacci levels, this 23 on this is the Fibonacci extensions between the 0 and the 23, or we could look at it on the long term between the high that we've seen on the 52-week high and this 23 Fibonacci level. So those are the two levels that I'm looking at. So I decided to try and build a strategy in and around that. So in both my IRA and in my margin account, same trade, different quantities obviously, but I went into Adobe, which is ticker symbol ADBE, and sold the iron condor in there that I talked about on Friday, just about the same strikes, and went into the May. I bought the 200 puts to define the risk on the 210 puts that I sold. That's that short put spread. Remember Friday we talked about this. Short put spread with a short call spread creates the iron condor, and that's what we're doing here. And I talk about what strike location is the best and how much you should collect for that type of strategy. So check that out at protraderstrategies.com. I don't have enough time to go into all those rules, but ultimately I did the 210 put spread with the 240 calls that I was short, and defined that risk by buying the 250 calls, and collected a total of $3.46 in both my margin and in my IRA. So I added both of those strategies today based on those rules that I talked about in the webinar. So you can check that out. Go to protraderstrategies.com and stay tuned for the next week's webinar, or Friday's webinar. We're going to continue to expand on all of these strategies that we start out with, the basic ones, and we're building on that, adding a little bit more risk to them and increasing our probabilities of success. So check that out and follow along with us. Give me a thumbs up or a thumbs down for the likes on this video. Also, give us some comments. We love the feedback. We want to make sure that these webinars and these daily market commentaries are kind of constructed so that you guys will get more out of them, and we don't know what you're going to be able to get out of these unless you give us some feedback. So we're looking for that. All right, so that's all I got for you guys today. Like I said, thumbs up, thumbs down, and if you can't take that, take it easy.